Global markets are on edge once again. A single oil route in the Middle East could determine where energy prices go next, and investors across the world are watching closely. Ray Watterson here. Let's break down what's moving the markets today. U.S. stock futures moved slightly higher after a mixed trading session overnight. NASDAQ futures and S&P 500 futures each gained around 0.2%, suggesting cautious optimism among investors. In Europe, however, sentiment was more fragile. Euro Stoxx 50 futures slipped slightly, while FTSE futures also moved lower as markets continued to digest rising geopolitical risks. Right now, the biggest concern for investors is energy. The ongoing conflict in the Middle East is raising fears that global oil trade could face serious disruptions. World leaders are scrambling to prevent a supply shock, but markets remain extremely sensitive to how the situation develops. At the center of this concern is the Strait of Hormuz. This narrow waterway is one of the most critical oil shipping routes in the world. A significant portion of global oil supply passes through this corridor every single day. That means any disruption there could have immediate consequences for global energy prices. Commodity analysts say the biggest question now is when safe passage for oil tankers can be guaranteed again. Another major risk is potential damage to energy infrastructure in the region. Even if large-scale fighting slows down, the possibility of continued drone attacks on energy facilities could keep markets unstable well into next year. Meanwhile, the US dollar has emerged as the primary safe haven asset during this period of market stress. Against the Japanese yen, the dollar traded near 158. The euro and the British pound both weakened slightly against the dollar. Interestingly, some traditional safe haven assets have not played their usual role. Gold has seen some profit-taking as investors sell gains to offset losses elsewhere in their portfolios. US Treasury bonds have also faced pressure because rising energy prices could push inflation higher. That could force central banks to keep interest rates elevated for longer. The 10-year U.S. Treasury yield is holding near 4.14%, while the 2-year yield remains close to 3.57%. Investors are also waiting for the latest United States inflation data expected later today. Stronger inflation numbers could reinforce expectations that central banks will keep monetary policy tight. In the commodities market, gold moves slightly higher and is trading near $5,200 per ounce. So right now, global markets are balancing two powerful forces: geopolitical uncertainty on one side and the risk of rising inflation on the other. And until there is more clarity on the conflict in the Middle East and the stability of global energy supplies, volatility is likely to remain the dominant theme for investors. This is Ray Watterson from LearnForexBasics.com. You can access free Forex education and trading psychology articles directly on the blog. Build structure. Protect capital.